BlackRock, Goldman Sachs, and JP Morgan are on the verge of making a major announcement involving Ripple, XRP, RLUSD, and the XRP layer. With the SEC lawsuit resolved, Ripple is no longer restricted from revealing new agreements, developments, and partnerships. The path is now open, and we're beginning to see the first impacts of this shift. For speculators focused purely on price, here's a reality check. In a few months, when you look back at XRP's price, you may remember today as a pivotal opportunity. Think of those who bought XRP around 50 cents. They were once impatient too, and now they look back with satisfaction. Timing, patience, and understanding the fundamentals are critical in this market. Let's examine Rexoxspray, a relatively small capital management firm. Their spot XRP ETF began trading in the US recently, and in just the first 90 minutes, it reached $24.5 million in volume. By the end of the first day, it totaled roughly $37.5 million. Among 710 ETFs launched in 2025, this small XRP spot ETF is already among the top 5 by trading volume. This has caught the attention of larger asset managers like Franklin Templeton, ARK Invest, and others, who are preparing their own XRP-based ETFs. This could trigger a race for adoption and lower fees, similar to the competitive dynamics seen in traditional finance. Ripple's institutional partnerships are expanding rapidly. On June 11, 2025, Hondo announced that it is integrating tokenized US Treasury bonds into the XRP Ledger using RLUSD for liquidity. This is not just theoretical, it's real-world adoption. Over $200 billion in stablecoins and more than $5 billion in tokenized treasuries are actively being used daily. Institutional investors are issuing and redeeming assets in real time, sometimes tens of millions of dollars per transaction. Major players like BlackRock, Franklin Templeton, Citigroup, Goldman Sachs, and JP Morgan are actively exploring XRP for institutional products. Tokenized ETFs, money market funds, bonds, and other financial instruments are moving onto the XRP layer because it is built for fast settlement and high liquidity, unlike other blockchains that rely on slower smart contracts. Comparing XRP's adoption to early Bitcoin ETF efforts is instructive. Initial Bitcoin ETFs took years to approve, and institutional adoption was slow. XRP's architecture allows traditional financial products to integrate more efficiently into the blockchain, creating a unique advantage for early participants who understand the infrastructure. The SEC's framework for crypto ETFs is also pivotal. Standardized rules now exist, allowing asset managers to submit applications more efficiently. This has triggered a surge of proposals for ETFs that include XRP and other major cryptocurrencies. Early entrants could benefit from both hype and adoption as these ETFs start trading. Beyond ETFs, Ripple's partnerships extend to large-scale tokenization. Franklin Templeton, DBS Bank, and other institutions are tokenizing money market funds and other instruments within the XRP ledger. While tokenized assets exist on blockchains like Ethereum, XRP is optimized for instant settlement, high liquidity, and interoperability across financial institutions. Tokenization is becoming a mainstream strategy. Consider how tokenized bonds and money market funds allow fractional ownership, instant settlement, and programmable compliance rules. These capabilities reduce counterparty risk and make cross-border liquidity more efficient. XRP is uniquely positioned as a bridge asset in this ecosystem. Institutional interest is also supported by historical parallels. In traditional finance, large institutional adoption of ETFs or mutual funds often triggers rapid inflows and price repricing. XRP structure allows it to benefit from similar dynamics, but with the added speed and efficiency of blockchain technology. We can also consider the broader macroeconomic environment. Governments and central banks are exploring digital assets, central bank digital currencies, CBDCs, and tokenized financial instruments. XRP's compatibility with these systems positions it as a bridge currency capable of connecting fiat, stablecoins, and other digital assets. Patience remains a key factor. Investors who held Bitcoin in 2010, Ethereum in 2012, or XRP in the 30 to 50 cents range saw massive long-term gains. Price fluctuations are normal, but understanding fundamentals, partnerships, and use cases is critical for long-term success. XRP currently trades around $3.04 after hitting $3.13 yesterday, with Bitcoin at $117,000. Liquidity is entering the market steadily, and once market makers can no longer maintain their positions, significant price movements could occur. XRP's story is not just speculation, it's adoption, utility, and strategic positioning in global finance. Now let's dive deeper into the XRP Ledger's technical advantages. XRP can handle over 1,500 transactions per second, significantly faster than Bitcoin or Ethereum. This high throughput allows Ripple to support real-world payment networks, cross-border settlements, and tokenized financial products. In addition, transaction fees are extremely low, making XRP cost-efficient for institutional applications. Ripple's escrow and governance system further ensure stability. Large portions of XRP are locked or controlled for strategic releases, reducing market volatility while supporting liquidity needs. This design differs from mined cryptocurrencies and offers a level of predictability that banks and institutional investors appreciate. We also see XRP's utility in cross-border transactions. Ripple's on-demand liquidity, ODL, service already supports hundreds of institutions, reducing transaction costs and settlement times. As global banking infrastructure upgrades and digital currencies proliferate, demand for XRP as a bridge currency will increase, locking up supply and potentially driving long-term value. Tokenized assets on the XRP ledger extend beyond bonds. Consider ETFs, money market funds, stablecoins, and even NFTs. Each of these products benefits from instant settlement, cross-border transfer capabilities, and minimal friction in transactions. For institutions, this is a game changer, reducing operational risk and increasing capital efficiency. Historically, assets with limited liquid supply but high perceived value tend to reprice violently when scarcity becomes apparent. XRP's partially locked supply, combined with growing institutional demand, creates conditions for significant market moves once adoption accelerates. The ripple effect is also worth noting. As more institutions adopt XRP-based products, other firms will follow, creating a network effect that increases XRP's utility. This is not speculation. It's a structural market trend, supported by real adoption and regulatory clarity. Finally, the global perspective is critical. Financial hubs like New York, London, Singapore, and Tokyo are increasingly exploring tokenized assets and digital currencies. XRP, positioned as a bridge currency with institutional-grade infrastructure, is in a unique position to benefit from global adoption. This is a pivotal moment. XRP is moving beyond hype and speculation into tangible institutional relevance. Understanding these developments now gives investors a perspective that most retail participants lack. Those who combine patience with awareness of XRP's real-world use cases are likely to be positioned for long-term success. If you found this analysis valuable, leave a like and comment below. What XRP topics or developments should we explore next? Staying informed is key in a market where timing, adoption, and utility determine winners.